Hello, welcome to your European Open briefing for Tuesday, September the 11th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So we are seeing a bit of easing in the risk of sentiment. In fact, we do have some weak risk on mood this morning. We can see Australian and Japanese stocks managed to end the day higher, and in Europe, stocks in Germany and France are also up. Though in China, we can see once again that stocks there ended the day lower as market sentiment is still being weighed by uncertainty over US trade policy. We still haven't heard from President Trump about the latest round of proposed tariffs of up to 200 billion worth on Chinese imports. The dollar is broadly softer this morning. Apart from the yen, the dollar-yen gains are mainly on the back of merger and acquisitions activity. If we look at European currencies, both the euro and the pound up, the euro being boosted by declining concerns about Italy, and the pound gaining on the back of comments by the EU's chief Brexit negotiator Michel Barnier, which boosted hopes of a deal by November. If you look at the Aussie, though, it is struggling. It's up by just 0.1% earlier. It did fall to fresh lows against the US dollar. It did get a bit of a lift later on from some upbeat business confidence data out of Australia. Taking a look at the loonie is also firmer, despite the fact that we haven't really heard any news on the NAFTA front. Negotiations are ongoing. They will continue today. So both currencies are likely to be gaining mainly on the back of a slightly weaker US dollar. If taking a look at commodities, both gold and oil prices are slightly higher this morning. The yen is also down sharply against the euro. Euro-yen, the biggest gainer this morning. The dollar index, the worst performer. Taking a close look at dollar-yen, we can see the pair came close to reaching the 111.50 level. That was mainly on the back of the acquisition by a Japanese firm of a US company, so that's likely to be only short-term gains there. There's still no news from the White House of what's going to happen to that 200 billion worth of tariffs, so markets are on standby on any news related to that, which could come in the coming days. The focus later on, though, in the week will turn to US data. We've got inflation numbers coming up on Thursday, followed by retail sales on Friday for the month of August. Let's now have a look at the Europe, in particular the Euro Swiss franc pair, which yesterday rallied sharply as the spread between Italian and German government bonds declined. So Italian government officials have in recent days been trying to reassure markets and the EU that the new Italian budget will not breach EU deficit rules. It won't add to the country's already high debt burden, and that any radical reforms will be introduced gradually. So we saw yesterday the decline in Italian government bond yields triggering a rally in the euro and a sell-off in the Swiss franc. The euro had reached a 3-week low of 1.1524 against the dollar before rising to around 1.1640 against the Swiss franc. It rose to 1.5-week high 1.1343 earlier today. The Swiss franc has been one of the main beneficiaries following the growing concerns that Italy could be headed for a fresh turmoil. So any news relating to Italy not heading towards any new crisis has been negative for the Swiss franc. And finally, looking at the British currency, the pound has rallied to 5.5-week high against both the dollar and the euro, touching 1.3086 versus the greenback, and falling to or the euro falling to 0.8887 against the pound. So Michel Barnier, the EU's chief negotiator, yesterday said that a deal is realistic within 6 to 8 weeks, and there have been signs that the EU is ready to hold a special summit by mid-November, at which point the divorce settlement would be finalized. So that's been positive for sterling, though the gains will likely be limited, given that now there's growing growing doubts about whether or not UK Parliament would approve May's plans, which is proving unpopular with British lawmakers. And a quick look at what's coming up later on today. We're going to have UK job numbers coming up shortly, followed by the German's Economic Sentiment Index. And later on in the US session, the job openings will be the main data. That's it from me. Thank you very much for watching and have a great day.